Hey guys, welcome. This is Tony Trades once again for that Friday live stream, guys. We are actually getting very consistent at this, and I mean, I'm starting to see a lot of questions. If you're tuning in from wherever you are, just drop a like button, drop a like, subscribe to the channel, guys. It really helps. Put a comment in the commentary chat. We have a open chat with Q&A as well. You want to ask questions, all right? I don't like to waste a lot of time on these Friday live streams. The point is for everybody to participate, to get to know and understand what we are doing here at Tony Trades. And one of the other things that I've noticed is many of you are jumping from courses to courses. You are having issues with fundamentals. You are having you have a general picture of what trading and financial markets is, but you are still struggling. And this is pretty much what I'm trying to do, trying to help you, give you the tools, trying to give you a very clear understanding of what happens, not just at the macros, but also the micros, how professionals, how institutions look at the market, and all the other financial market value that you will miss elsewhere. Now, before we begin, I've activated, once again, I've activated this bonus for you. You just put in the T-Stream on the pocket option dashboard. You'll see the promo code option there, and you can get 100% on your fast deposit. Guys, it's very important to understand what brokers you're using, and we will have a special edition on that, having analysis on brokerages. It's another different ball game, and I always tell people, especially novice traders that are coming in, you need to separate this industry from any other casino-like industry. Failure to understand, failure to have information and be informed, you will continue to make these same mistakes. All right, guys, so let's dive into today's Shockwave. Now, the theme for today is the post-shutdown Shockwave, right? How do we read the rebound? So, ladies and gentlemen, welcome to today's High Impact. Don't forget, we are also having some fundamental news I saw recently. Yeah, we're having flush manufacturing PMI as well that will come in as we see the New York end of week momentum. Now, ladies and gentlemen, you've noticed that we've had over 6 weeks, I guess, of the shutdown. Why do I concentrate mainly on the New York session? It's because we are having some intersection of sessions, and it's also important to capitalize on the timing. The seasonal tendency, where you are at the moment, is very important. If you're struggling with timings, I've had a separate video on that. You might want to go check it out. The momentum that comes out from the New York session is, if not the most important and easiest way to make some money. Reason being is we have volatile sessions around the time, and pairs are actually very sensitive to the fundamental aspect. Now, if you're around here, you could check out this time zone, see where you are, and try to get in sync with that. So we can see that London is just coming off lunchtime. We are 30 minutes away from 2. New York is around that sweet spot, right? At 9 o'clock and 8:30. This is where you want to position your entry points. This is key. Now, we also know that according to the fundamental side, the US shutdown didn't just pause, guys. The government just didn't all of a sudden say, you know what, we are stopping any kind of work. You have to understand that in the background, operations were all halted. So it just paused information. The fuel of global markets. We know that if you're not informed, you are really going to struggle in here. You need to be very informed. And what do I mean by that? Not just knowing the information, but being able to differentiate, to dissect, and understand how that affects each pair that you are trying to trade. Now, I always advise to go look up the official website, BLS. It's a very important key factor, other than sticking to just random sites out there. Well, if you look at Forex Factory, they do give the information, but I'd say you want to stick to a more detailed report. Here, pretty much if you're just a scalper and you understand, you're just trying to, if you have background information and you know what you're doing, then maybe that would be fine. But you want to analyze the data very well. You want to look at latest releases, and you could see we are having today's 21st. We had the employment situation, right? That was yesterday, and I expected you all to dissect the data. Now, we also have the timing, as you could see. It was on Thursday, and they give you a summary right here, the situation of the employment sector. We could see total non-farm payroll employment aged up by 119,000 in September, right? But has shown little change. So the difference between these numbers and the summary report is, here you might not be able to understand the micro leveled economics going on, and it's very important when you're making decisions, right? So as you get familiar with this, you'll be able to quickly check for those points and areas that actually matter to the economy. And they also give a background historical view of how they see the market, and that only means one thing: you're just trying to get in sync with the Fed. What is the Fed doing at this time? What is the sentiment? Are they, hawkish? Are they looking at reducing rates, increasing rates? And once you start to feel that, it makes a lot of sense when you're making decisions, guys. Now, today, all the delayed fundamentals that we've seen over time come crashing into the market at the same time. As you could see, this week has been very This week has been, let's start from the 16th up until 22nd, right? So all this news, this just coming out, has created some kind of compressed volatility, and you'll be able to see that in the charts. We're going to move to the charts in a while, in a minute. So this compressed volatility, there's been a lot of distorted sentiment, as you can see from the sentiment. You could open any. I usually use bar chart for the sentiment. You could also check out performance leaders report. You could move through the quote reports as well, and just play around with these tools that I give to you. It's very important to have a age in all ways. So these ages of we have a forex market map. So this sentiment right here, not just sentiment, but also the oversized reactions that don't have the way traditional economics models are expected. So I want you to think about it like a dam, like a dam that produces electricity. Imagine a scenario where we have weeks of water pressure. Don't forget, this has been the longest US shutdown in history, right? So we're having a lot of water behind the dam, and this creates a lot of pressure. So at one point, when they decide to release that pressure, we have a lot of water coming out. So it's like a whoosh. The market reprices everything. It reprices in minutes. Now we're also seeing at the same time, if you open the from blockchaincenter.net, it's a good tool. We'll explain why it's a good tool later on. However, you want to look at the Bitcoin sentiment as well. If you look at Bitcoin season versus the alt season, we are pretty much at 43. We're in the middle, and there's a lot of negative sentiment going on as I speak, because Bitcoin has fallen, and we understand that that affects a lot of markets. You have to ask yourself questions like, what if one basket of assets is affected? Where is the money going? We are like Shakespeare, we're like investigators looking for where the market is moving. Where is the next big move? Besides speculation, we also want to make some kind of informed decisions. Now, that's exactly why we're trading live today, right? We're not just playing around with the buy and sell. It's easy to buy and sell and get lost in all this, but you want to make a good informed decision before you press the buy or sell button. Now, let us look at the macro review, right? What really happened? What really transpired this week? So if you check what happened on Monday, understand that despite the shutdown delays, we finally started seeing some early fragments of labor data, and those fragments, of course, tell a story that we cannot ignore. If you check out, let us break down one by one, all right, the key releases. So we have average hourly earnings, and if you go to this, you could come over here, yep, and latest releases, and we have consumer price index, the employment situation. Okay, there we have it. Let's see. Real earnings. Let's see that. Real earnings, November 21st. Check out the yes. Now, real earnings summary, right? Let's break it down, guys. Actual was 0.2. It was 0.2, and yes, as you could see, the result stems from an increase of 0.2% in average hourly earnings, combined with an increase of 0.3% in consumer price index for all urban consumers. Now, this is a cooling wage signal, right? A cooling wage signal. That was yesterday. There you have it. 0 point earnings. Where is earnings? Let's see. Earnings. Flush manufacturing. PMI. Thursday. Earnings. Average earnings. 0.2. Exactly. You could see. From 0.3. So what does this mean? How can we interpret this? From 0.3 to 0.2. Right here on the website, the official website, it simply means that there's some sort of cooling wages signal, and that simply means it's monetary gold for the market. Why? Why is it monetary gold? I'm going to start asking some questions because many of you are very lost when I speak some of these things. Maybe the advanced group has an idea, but what it simply means is because the Fed watches wage inflation like a hawk, right? When wages slow down from 0.3 to 0.2, inflation relaxes, right? It's like a breather. You take a breathe in and then a breathe out. It's like you are relaxing, right? So in the Fed's eyes, when inflation relaxes, rate cut expectations expand. And when rate cuts expectations expand, the USD typically weakens, right? As simple as that. There's no rocket science to all this. But here's the deeper layer most traders miss, right? If you're looking at this drop from 0.3 to 0.2, it seems very small, but post-shutdown, the market amplifies this effect. So because the market had no fresh wage data for a couple of weeks, this new number suddenly becomes the reference point. So almost overweighted in, say, pricing models that they make. Now you could find this data and find the calculations. If you're really into the micros and the mathematical, statistical part, you could find your own age here, right? Now, looking at non-farm payrolls on the other hand, I've had this already open, so the links will be in the description. Non-farm payrolls, we had an actual of 119, right? 119 from 53. Now, this is really interesting because many of the times when you see lower numbers, you just think it's bearish and so forth. But understanding where this comes from is, I think, the most important. You see, this was a monster rebound, guys. This was a monster rebound. It was a monster rebound. Reason being is, imagine going from negative NFP. We had a negative NFP here, which was 50 minus 4 all the way to 119. That is a rebound and a half, right? So let's break down the narrative. It changes a lot. Reason being is, if the previous was minus 4,000, right? Minus 4,000 plus minus, the shutdown distorted a lot. This 119,000 in September may also be catch-up hiring, not net growth. You want to look at net growth very, very carefully. So the market will interpret this cautiously, not very aggressively. We also want to look at the sentimental part, the sentimental effect of what this 119,000 jobs from the non-farm payrolls in September. Remember, we're looking at the US Bureau of Labor Statistics, and there's no other better place to get it from the BLS website. Now, the sentimental effect is moderate USD support, but not enough to reverse the wage slowdown impact. This creates a mixed signal environment, ideal for sentiment trading, not pure fundamentals, just sentimental trading. And you could look at bar chart as well. Bar chart has a really good Forex map, and you could be able to look at performance leaders as well. Play around with everything. All the tools give you a nice niche. All right, and let's look at one last one. We had unemployment rate. Unemployment rate moved from 4.3% to 4.4%. Unemployment rate. Same from the official website. You could check that out. And what does this tell us? In simple terms, this is subtle but a little bit powerful. Why claims dropping from 228,000. Remember the unemployment claims moving all the way to 220,000 means fewer people filed for unemployment. So this is a soft sign of labor resilience. We have wage cooling. Let's now just break it down, all right? We have wage cooling. So it cooled down, meaning USD bearish. Okay. Next, we have a strong NFP, strong non-farm payroll. We have USD bullish. Lower unemployment claims, that is USD mildly bullish. And then shutdown distortion. Overall, we have a sentiment high risk. As simple as that. This is how you break down the data. So having that in at the back of your mind, we could see that this is exactly what creates dislocated markets. So this is a perfect territory for us. We like chaos, we like momentum and volatility. If you check the VIX, the volatility index, and see what's going on over there, compare that with your indices, check out what the stocks are doing, and you pretty much have a good picture, a well-informed decision on what asset classes you want to check in. Now, unemployment rate. This week's most psychological charged number. This rate didn't really explode. It didn't collapse, right? It was kind of in the middle. It remained stable enough, to signal no recession, but no overheating. As simple as that. So this gives the market the emotional permission to shift focus from, is America breaking or is America slowing just enough for the Fed to pivot? You have to ask yourself such questions. Does that shift alone move trillions of dollars that we're seeing from the crypto side, from the stocks? We want to look at the money, like where is the money moving? And this is Q4, we're coming to the end of the year. We have Christmas around the corner. We're looking at a lot of seasonal tendencies. And this is key when you are making decisions. You just don't want to blindly go in. So this is why today's session is very important because the market hasn't really priced in. And looking at all these pairs, we had the Japanese yen paired with the USD. We had Canadian dollars. We've looked at gold. What's the Euro USD doing? Brent oil as well. So even the pound USD this week, you could see what's happening on the higher time frames. We have a lot of whipsaws, a lot of consolidations, and it just simply means the market isn't priced in. And the synchronized release effect hasn't yet been seen. Now, that we've established this week's narrative. We've broken down what happened all the way from Monday and after the shutdown was stopped. Let's zoom in into what all these numbers mean. Just to give you one more quick bird's eye view of really what's happening. Now, because isolated data points are very misleading, all right, you want to have a good simple Excel sheet where you jot all these numbers and you try to compare with what actually is happening. So when we combine everything together, we start to see some kind of pattern. Now, if for those of you that are really experienced and have been at this for a while, you'll start to see some kind of patterns depending on your instrument that you're trading. All right. Please don't forget about the sentimental analysis. It's very important. I've given you very nice X handles. This is previously Twitter. You could go check that out. And mainly, I look at some of the prominent leaders. You could go check out the Fed Reserve as well. They have an official web handle, Twitter handle. We have people like Charlie Bilello, a chief market strategist. You could look at Bloomberg's terminal, look at Live Squash. For example, if we check Live Squash, we could see that you could see reposts from other important places. For example, we are seeing Federal Reserve Bank of Boston President Susan Collins signaled that holding interest rates steady would be appropriate for now, as inflation is likely to stay elevated for some time. So just getting some kind of understanding, a feel for the market is very important. When data arrives late, the market behaves like a thirsty animal. It drinks everything too quickly. What does that create? It creates overreaction candles, and we could see these candles on the lower time frame. If you check the 15-minute, all right, we have delayed momentum. All this is some kind of accumulation, delayed momentum. We have false reversals. If you draw your highs and your lows, you'll be able to see. I haven't yet mapped them out because I assume that many of you have your levels, and I taught you how to map out the real levels using the real true highs and true lows. That is key because many of the brokerage companies play around with these wicks, and that can affect your other analysis. Like if you're doing mapping out Fibonacci levels, that could also be an issue. Getting intraday banker dealer ranges, equilibrium points, highs, lows, and all that kind of stuff. All right, guys. Also, besides false reversals, we also have excess volatility that comes in, and that simply means, what does that mean? That simply means that the fast reactions that we have are never real. All right. The second reactions that we get, if you look at yesterday, let's see, we had pretty much nothing. USDJPY, we could say we had some kind of false breakout. Don't forget, it's a Friday. We might have some exhaustion candles. That means we're having pullbacks. Compare that with your average true range. You want to go check out my YouTube channel. Check out all those videos that I've been pumping out there for you. There's a lot of information there. You want to know how to play around with the strategies. Some strategies don't work on Fridays, for example. If you're a scalper, what strategy would you use? So if traders overweight wage cooling, we've already gone through the fact that we understand the US drops, risk assets rise, the yen strengthens, gold gains. By the way, speaking about gold, now we've had a very good move on gold for the past couple of months. So gold has been on a good ride. Yeah, gold, if you've been able to go into gold from, let's see, let's get this. Yeah, gold has had a very nice move. It's been really going high over. Currently, we see that. Let's see. So gold is trading at 4,000 now, 4,029 at the highs. Now, gold probably will soften after the NFT rebound and safe havens pull back, and that is good because once the safe havens pull back, however, I'm a little skeptical about this. Usually, we have people buying a lot of gold towards the end of the year, and most likely today it will have a lot of fake outs, stop hands, and all that kind of stuff. So that is for sentiment, right? That's for sentiment. We don't want to waste a lot of time. Now, let me show you how I combine sentiment tools that I've just explained, you know, and with how I combine them with some of these. Now I have a tab here. If you could see, I started off with the time zones, right? I moved to the fundamental side. We have a monthly performance heat map where we combine currencies, forex, indices, bonds, energy, metals, grains if you're into all that kind of stuff, right? But it's always good to be ahead of the curve. And of course, pocket options that I use here. Here's where the execution happens, right? After you combine everything, my setups remain simple, clean. If you see, I don't play around with a lot of indicators. Very simple. I understand the fundamental perspective, and I'm not just speculating, right? I look for clean confirmations, very clean confirmations. Time alignment, I always look at the time. Today is 21st. We're coming to the end of November. We have one more month. Don't forget, all the elite will probably are racing, actually. They're racing to close the year with profits. Many are going on holiday with their families, all that kind of stuff. So you want to position yourself by mid-December. You know, you're starting to go slow on your risk. Manage your risk very well. You don't want to risk all your capital that you've worked the whole entire year. And once you have time alignment and sentiments, timestamps, always align trades with global session energy. That's key. You see, markets don't move because of data, not because of this data that I'm wobbling around. They move because of who is awake to react. And always ask yourself a question. What is happening? If you look at Forex market, for example, Forex factory here, you could see this is the heartbeat, right? We're having flash manufacturing PMI coming out at in about an hour. So if you're in any trades, you just want to go to my Telegram community, check it out. We'll have a New York session over there, and we'll be able to identify some of these pressure points on the calendar. Map this all out, have a journal where you write down all this information. Very, very key. So seasonal flows help confirm whether today's reaction is emotional or structural. You want to differentiate between an emotional reaction or a predefined institutional structural decision, right? And you could see that clearly on any currency pair that you open. If you're into crypto, it's a little hard because some of the historical data is not really clear and the volatility is just insane. But if you're looking at traditional pairs, like just normal currencies like the Euro USD or the GBP CAD, that is a totally different ball game, right? Now, if you look at bar chart, we have performance reports. This performance report is key because it shows us which currency is already positioned before the data. We have markets like if you look at, oh, by the way, another nice correlative tool that I use is not just the measures. If you could pair like a major currency with another kind of minor currency, say the Indian rupee, you look at the Brazilian real, and extrapolate that across all pairs and try to get the true value of the true energy of that pair. That is also a way that you could get an edge and before you pull up any kind of move. All right, now there are always clues going on. If you look at BSL, as I mentioned earlier, BSL is simply where the shutdown delayed. You could get this data from the official website, and then you try to correlate all that. You could say inflation plus wages equals Fed equation. Now, you could have this kind of equations, not so that next time that the same thing happens, you're able to make the right decision, or you could actually recall. Now, if you look at altcoin season index, this index is really important because for cross-market sentiment, if crypto is overextended, right? For example, we had, I think it was last week, we had a spike above 75. So if the crypto again is overextended, it's simple. That means US sentiment becomes very exaggerated, extremely exaggerated. And of course, the Twitter handles that, like I've mentioned, live trade sentiments, not analysis. Just come to my page, check it out. Look at all these people that I'm following. Zero Hedge as well is a good informative handle. All right, guys, now let's move into some structural setups that I want to share with you. All right, structural setups. So my viewers, I'd like to ask certain questions, or rather ask yourself these questions the next time you want to get into any positions. One, where USD sentiment becomes decisive, right? Is it bearish? Is it bullish? Overall, from what we've talked about, you've checked out the monthly hit report. Write this down one by one and ask yourself, are we bearish? Are we bullish? Right? Also ask yourself, how do we detect any fake outs around data? If the data is not correlating with the chart at the moment with your level on the preferably daily time frames. Did it move up? Did it move in the opposite direction? Write that down. Have you identified any real breakouts after the lagged data floods? Now, when it comes to brokerage companies, you want to look at the spread. Look at the volume. Look at liquidity distortions during these synchronized releases. How are they affected? You could just get a simple moving average. I talk about all these indicators on my channel. Look at the MACD. MACD combines the moving averages and volume indicators. Look at that. How is that? Are there any correlations? Any are there any correlations going on? So you write that down, and you could move along the lines of informed decisions. All right. So that's pretty much it, guys. We'll keep talking about this over time. We'll keep re-emphasizing that dissecting some of these charts simply takes a lot of practice. You need to practice your way out of this, understanding the true market intentions. And once you start to watch these reactions, the shockwaves, where traders misinterpret the fast candles, especially any spikes that you see, when do the real moves begin? All right. So you want to notice all that, how sentiment shifts after the second pulse, right? We have waves. Look at the waves. And most pairs currently are, okay, we have a nice pair here, USD JPY. And looking at the daily, we've had an overextended. So clearly we might come down today, but we'll wait for the New York session. So you want to keep it emotional, but a little controlled, right? Don't overgo to the extreme, because that way you might make some mistakes. Now, before I wrap up, we will have some signals coming in probably in the next couple of minutes at the end of this live stream. So if you check the world map, currently we are somewhere in here. So New York, it's 2 minutes to 9 o'clock, and you want to get into positions around this time. So you expect some signals. We've already had 75% for today already, 2 sessions. So this session we're looking to bang some more. Before I wrap up, guys, don't forget to use the T-Stream promo code to get, say, 100% bonus in your fast deposit. If you're live here, you want to use the charts, DM me, ask me questions, guys. If it's fundamental, macroeconomics, microeconomics as well, that's up to you, guys. If you're having any issues with some of the videos, get into those charts, ask, be very proactive. I'm here to share a lot of experience and knowledge from all my institutional growth back in the brokerage days, in the exchanges, the market making, the risk management, all that kind of stuff. You ask questions and I'll be really glad to help out. Don't forget, I have a couple of free content there. I'll keep updating this. You could check out the Martingale spreadsheet. It's free for you. You could just put your deposit, say if you have, say, $20,000, you just put it in there and it calculates for you the stakes, right? You have steps here. It will calculate those stakes for you. You want to refresh this page and you could see how much to increase per trade. Don't forget to use risk management. I normally stick to about 1 to 2% per trade, and that way you're able to have more bets. All right, guys. Once again, today's market wasn't just about data, right? We've looked at a lot of stuff. The rebounds, how to trade the rebounds. Right now, I'm not getting into anything because it's a Friday, and I'm just waiting for the. All right, there we have it, 9 a.m. So we're going to move back to my Telegram channel, and just if you're paying attention, you'll get some signals. Now, I've also programmed some trading bots. You want to use that if you understand how the market changes quickly. Sometimes your emotions are very high. You want to automate your trades. I have access to that. You could go check out my bot that I've done personally based on how I see the market, how I've experienced it. So I code this and you're able to take advantage of that. You could change the parameters according to your risk appetite and also gain on that. Now, not forgetting, we have social trading as well. Under this option, you could see real professionals, and I'm somewhere in there. You'd have to look for me. And you could just copy trade them, right? They're exclusive ways to capitalize. If you're busy, you have a 9 to 5, you have work during the day, you don't have time for all this kind of analysis. You could just get in there and copy trade, as simple as that. And every time professionals make money, you could also make some money as well. Well, guys, let us move to the group. Nothing much here. On a little time frame, we're seeing, yeah, it's pretty much stuck. So I'll see you guys in the next session. Keep studying, keep growing, and keep trading with purpose, guys. See you all in my live session. Have a great weekend, and catch you guys in the next live stream on Friday. Cheers.